Hi, welcome back to our YouTube channel. Now, our topic for today is about continuous charts versus individual chart. Now, some of you might not really able to differentiate what is the difference between continuous chart and also individual chart, especially for those who are trading in stocks or investing in stocks, right? This is a very new concept, especially for you, but it is very important for you to understand what is the difference between using continuous chart and also using individual chart. Because if you're using it wrongly, it might affect your performance in trading as well. And some of the accuracy might not be there. So we are going to discuss about what is the difference between continuous chart and how do you use it, and what is the difference between individual chart and how do you use it. Now, before I start, if this is your first visit, please remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. As usual, before we start, I need to do a disclaimer. This session is only meant for education purposes. There's no buy or sell call. Now, looking at this price quote, which I already quoted from a screenshot from NextView itself, you can see that actually beside, like for example, right now is end of August. You can see that the contract months available for you to trade is technically September, which is the spot month, and the second month will be October, and the third month will be November. But do you notice that actually there's another line, which is the FCPO C1? Do you see that? So this C stands for continuous. I'm not quite sure whether you're aware that there's the difference between your continuous and between your individual months. So this is your continuous price quote and this is your individual months price quote. So I'm not quite sure whether you are aware or not. What is the difference or what are the differences? And technically, some of you might be aware that it seems like the continuous price quote, right, for this 4,000 plus is equivalent to the price reflected for the month of November. And this is something that will make a huge difference, or it will make a very huge difference when you are doing your technical analysis when it comes to futures trading. So later I'm going to tell you exactly what are the differences and what you need to take note as well. Now, let me continue with this particular chart. Now, since young, we are being exposed to one of the games called Spot the Differences. Am I correct? You have your right side of the charts and you have your left side of your charts. Can you spot the differences or not? Maybe you pause first, then you spot the difference, then you continue with this particular video. I can't pause and hold for you, so you must pause it yourself and just spot the difference between your right hand side and also the left hand side. Then later I will disclose to you what are the differences and maybe you will understand from that. Beside the color, definitely you're going to tell me, hey, this is black color, this is with colors like green and also red colors. But this is not the main, not the focus. You must focus in terms of the price itself. Do you notice what are the difference or not? And both, they are also FCPO chart and both, they are also screenshot on the same day itself. So can you spot the differences or not? And it's definitely the same products. And you can see that nearest to these, right? The chart, everything, it seems very similar. So what are the differences? Spot it. And I'm going to explain to you in a short while. Now, coming back to this, it's very simple for you to understand. Continuous, meaning that they are going to capture all the active month itself. Continuing, meaning any month that is an active month, they will capture. Any month is not an active month, they are not going to actually capture. Meaning what? Active months for FCPO is always will be the third month. But for example, for FKLI, it will be always the spot month itself. So it's very different. So FCPO, they are going to always capture the third month price only. So meaning subsequently, we are going to have December as our active month, which is the third month. Then subsequently, this will only reflecting the December month. And continually, for example, subsequently, we are going to have the January 2023, the contract months will be the most active month, then FCPO C1 will be only capturing the January month itself. They will only capture the active month. It's like for FKLI, they will only capture the spot month. Like for example, right now it's end of August, it will still be capturing the August month, and subsequently they are going to capture the September month itself only. Then once September month expired, they are going to capture the October itself. But for FCPO, it's very different because we always only trade the third month, which is the highest volume month. Then in terms of this, you are going to see that they're only capturing the third month itself. So in short, I'm going to summarize in this. You can see that FCPO C1, they are capturing all the third month contracts. Whenever any contract month becomes the third month itself, they are going to capture that particular month. For example, we are going to see the October month. Previously, they are capturing the October month. Currently, they are capturing the November month, which is the third month. And subsequently, you are going to see that once reach 16th of September, they are going to capture the FCPO C1 is going to capture the December contract months. But if you are going to look at only FCPO November contract months, this is only capturing the November contract itself. So since inception, for example, the November month since inception, let's say 1 to 2 years ago, they already start to capture that. But they only capture the November itself. Unlike the FCPO continuous, they are capturing all the active months, which consist of previously October, right now November, in future they are going to capture the December, January, and vice versa. So we look at one of the case study, then you understand that it is very important for you to use the correct chart to do your analysis or to insert your indicators so that you can have a correct analysis that you are going to do. For example, for this particular two chart, I'm going to show it to you what is the difference. Then subsequently, I'm going to show it to you exactly if you're going to insert indicators, what are the differences as well. Look at your left hand side. Can you spot here this particular part? This is for November month itself only, the individual's contract months chart for November month. So meaning since, like for example, last year, we already have November month. They are starting to capture it. Like for example, right now, we already have November month for 2023 as well. So the chart itself already start to capture the price itself. But you can see that initially, because like for example, right now, if you are going to trade November month 2023, less traders, less volume will be traded as well. Only for those physical players, they might be doing their hedging, or for those spread traders, they are doing that. Other than that, they are not doing. So you can see that all the prices, right, it's like plotting one dot only. Maybe less people they are trading or less price being transacted. Maybe during the day itself, there's only one price being transacted. That's why you can see that it's not a usual chart that you are going to see. But unlike the continuous chart, you're going to see that it's quite smooth. It looks very different. Can you see that? Because continuous chart always capturing the active contract months. That's why you can see that the price itself move very normal. Unlike the individual chart, this is a bit abnormal. Can you see that? But closing towards the end, you can see that the price will be similar because right now they are capturing the same month. Because right now we are in the November month. At the same time, the continuous chart also capturing the November month. But when you insert indicators, for example, especially when you are inserting those indicators for mid to long-term trading, let's say in this case, I'm going to insert the SMA 50 for you to do a comparison. If you're inserting the SMA 50 in individual months, meaning that the November month itself, many of retailers, you like to use the November contract months itself to do an analysis. It is very different if you're using an individual contract months and also using a continuous contract months. So please check with your brokers how to get your continuous chart out. Because I believe in Malaysia, majority of the brokers, your trading platform, you'll be able to capture the continuous chart itself. So when you insert, for example, in this case, insert SMA 50, this indicates that the current SMA 50 is at the price of 4,303. But for continuous chart, your SMA 50 is only indicating a 4,295. still a difference, especially if you need accuracy or when you're doing your back testing. So when you're doing your back testing, capturing the correct data for you to do your analysis is very important. Now, some of us, when we do our back testing, sometimes we will be going for individual chart. But as a general, majority of retails, actually when you do your back testing or even you're doing your technical analysis, you should focus in terms of continuous chart. You will not be too wrong. So subsequently, then you will understand actually in certain circumstances only you will be doing your analysis or even your back testing based on individual chart. So please make sure moving forward, when you bring your chart up, many of you like to do your technical analysis, especially when it comes to futures trading, make sure you capture the correct chart and make sure you use the correct chart. Deal? So before I end, please remember to subscribe to our YouTube channel and please remember to give us a thumbs up. I'm going to see you in our next YouTube session. Bye-bye.